Oh, what's up, everybody? This is Sumko, the Korean bro, and let's keep on reading article again, okay? Sorry for delay. My computer sucks. Keep getting problems with my computer, but gotta do what I gotta do. Let's look at Zscaler first, okay? Mm. Okay, the green flag. Hmm. Many factors went into this success, attracting more large contracts. Including strong growth in Zscaler's overall business. The company has also built a more robust platform that is especially useful for cloud-based business that need to protect their data from bad actors. Mm. This tilt toward bigger country is being amplified by rising commitment from Zscaler's customer base in general. Average order renewals occurred at 125% their previous value in quarter three, which confirms that the company is delivering plenty of value to existing clients. We have a strong and loyal base of customers. CEO Jay Chaudhry said in a recent call with investors, the red flag more than losses. Executives in early June highlighted Zscaler's improving finances with non-GAAP operating profit margin rising to 13% of sales over the past 9 months compared to 10% of sales the prior year period. Yet, the company continues to get gosh red ink when it comes to earnings under generally accepted accounting principles. Operating losses landed at 16% of sales through the first three quarters of fiscal 2023 compared to 32% loss a year earlier. Those losses look a bit riskier given the shaky economic environment. These skillers seeing longer lead times for contract closes as enterprises become more cautious in their spending. That shift was awesome. Hearing my voice, my computer sucks. I don't know why. When I opened my computer, it got so slow. So for a moment, I felt like, should I do it tomorrow? But uh, I I uh, I kept thinking to myself, I gotta do it. So I'm here again. But tonight I'll be doing it for like 20 minutes or so, and then because we gotta go to bed, right? And I was talking about Zscaler, the company name Zscaler, and okay, but this author thinks it's still bullish on Zscaler. The good news outweighs the bad for Zscaler right now. Though solid demand trends in recent months show how enterprises are prioritizing spending on digital security and identity management even as they pull back in other areas. Zscaler's market share gains in these attractive industries suggest it can grow sales in tougher selling environments, with growth likely accelerating during a cyclical upturn. Cautious investor might want to watch the business over the next few quarters for evidence that it has finally broke into sustainable positive profits. If current trends continues, the shift might occur as early late as late 2023. If you're more comfortable with risk, you might consider putting Zscaler in your portfolio right now. The stock has rallied this year but remains far below its all-time high. Its last few quarterly reports show encouraging progress in areas like contract size, profitability, and renewal rates. So, to summarize, there's a green flag and red flag. The red flag is that there's more losses. Um, if you're a cautious investor, investing into Zscaler is a bit risky, but it's gaining a lot more users and they're retaining users, which is a good sign. People are satisfied with the service they provide, right? So let's keep on reading this one more time so that I can be confirmed with the decision that I had made earlier. The rising country values. Less than 2 years ago, Zscaler counted roughly 200 customers who had committed to over $1 million of annual contract spending. That figure passed 400 in early 2023 after this growth segments expanded by 39% on top of the year prior year 77% spike. Many factors went into this success, attracting more large contracts, including strong growth in Zscaler's overall business. The company has also built a more robust platform that is especially useful for a cloud-based business that needs to protect their data from bad actors. This tilt toward bigger contracts is being amplified by rising commitment from Zscaler's customer base in general. Average order renewals occurred 125% their previous value in quarter three, which confirms that the company is delivering plenty of value to existing clients. We have a strong and loyal base of customers, CEO Jay Chandra said in recent call with investors. So they have a loyal base customers, which is a good sign, right? So let's see what else do we have. Okay, okay. Let's see. PayPal and Roku. Roku is the one that I've been keep talking about, and also the PayPal is just the one that I looked into at lunchtime today. Let's see what's up with PayPal. Okay. First, like Roku, PayPal is another pandemic winner that has fallen sharply in the aftermath of the health crisis as the boom in e-commerce and other online spending has faded. The stock has fallen nearly 80% from its peak in 2021. This sell-off has set up a buying opportunity since PayPal is still solidly profitable. Investors sold the stock off following the first quarter earnings reports, which revealed that revenue grew 9%, but branded volume or the core PayPal business was sluggish, and management trimmed its margin guidance. However, the company's unbranded business, led by Braintree, delivered strong results. Braintree is a payment processing platform that helps merchants accept online and mobile payments. The company also delivered strong profit growth in the first quarter, with adjusted earnings per share jumping from 0.88 to $1.17. And PayPal has called for the full year number to grow 20% to $4.95, which makes the stock still at a four price earnings ratio of less than 13. Investors have bailed from the stock as PayPal faces increasing competition from Apple, and there's uncertainty about the next CEO of PayPal. CEO Dan Schulman said he's leaving the company at the end of the year. Still, PayPal's size and scale should reassure investors that it can defend its market share from Apple. The company has about 400 million active customer accounts and 35 million merchants accounts. It continues to make improvements to its products. Its payment service provider is gaining market share, recently partnering with the likes of Uber, Booking Holdings, and Shopify. With a rock bottom valuation, a well known brand, and likely tailwinds from the economic recovery, PayPal looks like a great buy right now. People say because of competition expected, PayPal is not as what it is not as good as it seems, but considering the size of its company, PayPal is still good to go. You know, and let's look at Roku. Roku stock has collapsed since the pandemic-driven boom in streaming. The stock is down more than 80% from its peak as the digital advertising market has dried up. Its ramp up in investment was poorly timed. However, it's a mistake to think that Roku is a broken stock. It's still the leading streaming distribution platform in the US and other parts of the world. Usage on the platform is increasing rapidly. The number of active accounts reached 71.6 million in the first quarter, up 17% from the year ago quarter, and streaming hours jumped 20% to $25.1 billion. Like other digital advertising platforms, including Alphabet and Meta platforms, Roku is suffering from the downturn in advertising. But over the long term, the future for connected TV or ad-based streaming looks strong. Walt Disney and Netflix launched ad-based streaming late last year. And now Amazon seems set to join them as e-commerce giants reportedly holding discussions about launching an ad tier. If it does so, they will mean every major streaming services in the US offers an advertising option. Connected TV is also appealing to advertisers because it offers the targeting capabilities of digital advertising with the engagement of video. The advertising market will eventually recover, and when it does, Roku looks primed to be a big winner. With a market capitalization of just $9 billion right now, the stock could easily be a multi-bagger, since streaming will continue to take share from linear television, which will drive growth at Roku. Profits should return too, thanks to the operating leverage into ad-driven business model. So they are the ones that I kept investing into. Hmm. And what else do we have? Oh, here comes Zscaler again. C3 Point AI. Let's see why he buys C3 Point AI. Interest in artificial intelligence hit new heights among investors in 2023, and that lead awaiting the stock price of C3.ai. The company spent years pioneering AI for enterprises, though the stock price suffered a peak to trough collapse of 93% between 2020 and 2022. The company struggled to deliver the growth that investors were expecting, but thanks to adjustment to its revenue model, the growth could be right around the corner. C3.ai has built more than 40 plug-and-play AI applications for businesses in over a dozen different industries from financial services to energy. For many of them, C3.ai represents an on-ramp to AI technologies because they don't have the expertise to build that software from scratch in-house. For example, its reliability application can help oil and natural gas companies predict equipment failures, which can potentially prevent financial environment disasters. At the conclusion of its fiscal 2023, C3.ai had 287 customers, up 35% from the end of its fiscal 2022. However, its revenue only grew by 5% to $266.8 million. That's because the company is in the middle of a transition from subscription-based pricing to consumption-based pricing. Subscription contracts take a long time to negotiate, which makes customer onboard onerous. But with consumption pricing, new customers can sign up quickly and only pay for what they use. But it will take time for those customers to scale up their activities under the new model, which is why C3.ai warned investors to expect a slowdown in revenue growth in the short term. But the company is guiding for up to 20% growth in the current fiscal year, and it's likely to accelerate beyond that starting in its fiscal 2025. Investors have priced some of that expected growth into stock, and the positive sentiment surrounding AI contributed to its buoyancy. C3.ai stock price surged 234% so far this year. It's still down 77% from its all-time high, which means this could be a great moment for investors to buy in. With a new bull market potentially around the corner, waiting until the company's growth accelerates in fiscal 2025 might be a too late, especially given all of the attention AI companies are getting now. Okay, I read it aloud and really fast because I got not enough time. It's already 12:52 at night. It's midnight and time to go to bed, but like I felt like I really needed to do it. So the article that I just read is about C3.ai, and still a lot of people are uh not really positive in terms of buying this one, but like uh as far as this article goes, it's got a lot of potential, and like they have a lot of customers, and actual use case is described even in this article, and they even have more attracted customers compared to the year before. I want to read an article about Zscaler again, but I feel like I have to go to bed. Okay. 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 Let's go to bed. Okay. Time to say goodbye and have a great night. Uni, let's go. You still there? Okay. Let's have a good night. Bye bye.